glad to get a seat.
Yeah. Thanks so much, Karan, first of all, for taking time and, speaking with us. Slight, change of track in terms of we've been seeing such amazing innovations, founders talking about what they're building for the future and where we are in the deep tech ecosystem in India, right? One of the constant questions that keeps coming to us, and I'm sure for you as well, is where is the capital going to come from for all of these companies as they scale and get to the next levels, right? So, topic for discussion, how is India as a destination for global capital? Karan, a dear friend and supporter of Speciale for a while. Thanks so much. MD at Avendus Capital, one of the leading investment banking firms in the country. He leads tech and digital investment banking. He's been in the industry for close to 20 years now, has seen a lot of cycles. So maybe I'll start with that, right? Why don't you reflect upon what you have seen, Karan, particularly over the last 10 years and beyond, in terms of how India has been looked at as a capital destination for investors globally?
Sure, I would say what I've seen in the last 30 minutes, I am shit scared because I'm seeing robots make recipes and AI writing scripts and animations. So I don't know as a banker what I need to do then. So that's pretty much what we do, cook stories. So, but yeah, I would say it's been a very, very interesting journey, and it's a very relevant question. Tech in India is practically, if you look at mainstream tech investing, is around 12 to 15 years old at best. Pretty much, the first $100 million check got written in the year 2013 in the internet and broad tech space, which means it's practically just 10 years of meaningful growth capital that came into the market. And it was very similar, right? The questions are very similar. The questions that you have for deep tech, space tech, new age manufacturing, IoT hardware, the same questions we had for consumer internet. Would the investors like, your usual priority investors which were present in India, your Warburgs and the KKRs and the GAs, would they step up and do new age consumer tech B2C? Because there was no precedence, there were no listed companies, companies were making losses, and they continue to do so after 15 years also. So they were big question marks. However, I think one thing that your community, which is the investor community, really does well is smells money, and I think that's the opportunity that most investors saw at that point of time. And fast forward today, you see around 12 to 15 billion dollars of capital usually comes into the tech space every year in India, and we also have some amazing years like FY22 when we had almost 40-45 billion dollars that came into the market. And yes, last year has been a bit of a challenge. It's been around $7-8 billion that has come to the market, but there's also a factor of the previous years and the capital that had got loaded up. So if I have to summarize, I would say yes, capital for India is going to be available in enormous amounts of volume. We are seeing massive amounts of investors across spectrum, be it VCs, late VCs, early growth, late growth, sovereigns, pension funds, crossover funds, and the most important part is domestic capital itself. I think all these pools of capital I haven't seen in the last 10 years. I think the question is about finding the right timing in terms of deployment, and in my view, floodgates will open up, be it 6 months, 12 months, and then this sector certainly should benefit from that.
Got it. No, that's very helpful context. Obviously, a decade ago, the consumer side, and now probably a different flavor of companies. Any specific reasons that you want to point out, factors, key things that are leading to this, India becoming a good destination? What are overall investors looking at? What are they excited about most?
Sure. See, again, a decade back, the discussion used to be, India used to be an allocation from a emerging markets bucket for most investors. Now India pretty much, I would say, investors who invest outside of the US, India becomes like an individual destination itself. In most cases, amongst the top 3 preferred destinations for investors to invest in. And when I say investors, not just GPs, I think this pressure or this interest or excitement also comes in largely from the LPs who want that exposure across stages and sectors in the market like India. China is a shut door for most people. They are either pulling out or they have dedicated funds which are purely now domiciled within China to invest over there. So India is becoming a very relevant destination. And even from a BRIC standpoint or some other kind of flavors that we saw, say, in LATAM and South America, I think India's stability, and I think what we have seen in the last 7 to 8 years in terms of having a very stable government, very progressive, I think it all adds up. So very frankly, when we talk to the investors today, the common belief is that maybe in our history of the country, we haven't seen a period where the next 7 to 10 years look like without any speed bumps. And that has not been the case for a recent, at least, last 3 or 4 decades that, we've been around. So I think that's a very big positive. Think about, at least $50 to $100 billion of dry gunpowder available across, venture growth and some of the other kind of asset classes I spoke about. And then importantly, this entire surge of domestic capital which will come in, which really rotates within the country and keeps getting redeployed at a higher kind of a number. I think these are all signs as to why they're looking at India as an opportunity, and won't get into all our demographics, GDP. I think all of those are, I think known factors, but purely speaking from the supply side of it, these are the reasons that they believe India is a market that they can't miss out.
Lovely. I think the stability in terms of the political landscape is one that you're pointing out, obvious advantages in terms of, our demographics and growth rate, right? And you're saying no speed bumps for a while. That's very heartening to hear. When you talk to global investors and when they look at this as a top 3 destination, do they also pick sectors within it, or they're just overall saying India's great across sectors, right? We've had success in a few sectors already, services, product enabled, consumer, etc. Are there sector flavors or interest areas specifically that you want to talk about that you've heard a lot?
Sure. So the time an investor comes in, I think the investor thinks about the exit, and it's very critical where that liquidity is going to come in from, both in terms of just a sheer interest, in terms of the mode in which an asset can be exited, either through public markets, M&A, the two being, the most kind of a prominent exit forms. And the second bit is what kind of multiples you will get it. Would you have a multiple expansion on the multiples you gave in and, when you exit at? So towards that extent, I think most people have been most comfortable where the underlying of that tech sector is well understood in India. And what I mean by that is IT services well understood, and software is something that they believe public markets would appreciate. Similarly, consumer companies in India, you look at across the board, FMCG companies, consumer companies, anyone who's doing more than 10, 15% EBITDA, growing at even 15% rates at 35 to 40 times EV by EBITDA. It's an amazing kind of a opportunity for them to back then those consumer companies. And that's the reason you would see, pretty much the first wave of 15 or 18 tech companies that went the public route. Most of them were consumer focused companies. So yes, till now, I would say consumer as an underlying sector, software tech as an underlying sector has been sort of the biggest kind of a driver of capital. 90% of the capital has come across B2C, fintech, and the enablers being payments, logistics, and all. Besides SaaS. So that's a big kind of a component. However, as I mentioned, right, this was not there even 10 years back. Increasingly, investors are discussing about opportunities in deep tech. Can India be the manufacturing hub? Do we have, as the deep professor did mention on one of the slides, make in India for the world? I think that is something that the investors are willing to look beyond just software, beyond just, I would say, consumer tech, where you're building in India, but for the world. I think hardware or manufacturing something that they do believe that India holds a lot of promise in, given the amount of talent that we have.
Does that help India because we have some, let's say, automotive manufacturing and other ecosystem already? Can we use that as a stepping stone to say we will build on top of that from a cutting edge deep tech innovation perspective and build on top of the existing know-how and talent base? Is that well known and well understood from a capital source perspective globally for us to ride upon?
I think it's very well understood. Be it the recent phenomena on the even the mobile manufacturing side, semiconductor manufacturing side, even in defense and aero with all the offset manufacturing policies that the government has, I think it's well understood. I think the key challenge that most investors have in mind before they open the purse strings and go ballistic. It's more about scalability of some of this tech. Is IP getting created over here, or are we just a outsourced kind of a manufacturing hub where it's more assembling of items with maybe some manufacturing over here? I think that's the core aspect that interests investors. That is the core IP getting created here, or are we a manufacturing hub? Because in both of these cases, again, speaking from just value creation for investors, it's all about how would these companies be valued, because there are no precedents as yet on the new age next gen manufacturing. But yes, there is enough kind of an appreciation that can be seen with even the reception that the Tata Tech IPO had pretty much all through the last few days, and that is not even deep tech as some of the examples we are seeing over here.
Do you want to talk about a couple of headline sectors that you are also spending time on looking at and seeing a very strong interest in the last 2 years or 3 years that are breakthrough, that are newer sectors where capital is coming in both domestic and global, and people are, investor community is very, very strong about for the next 5 years, let's say?
Sure. So I think one of the things is because the nature of investors have changed. So last 18 months, we haven't seen a lot of hedge funds. We haven't seen a lot of crossover funds. The kind of people we are seeing most active are sovereign funds, DFIs, pension funds. So by just the nature of these investors, they have been very keen on things related to ESG, climate, sustainability, and as part of, and again, you can also widen the horizon. As an example, for us, we are very bullish on agri-tech. That's one sector that we put out a report, year back, and we are closing our first set of deals in the sector within a year of putting out our thought pieces. And again, agri gets, broadly covered in the sustainability part or the climate tech part. So there's one that we're seeing a lot of interest. We're seeing tremendous interest on the EV side. Obviously, be it on, technology related to battery, be it related to some of the differentiated plays. So yes, we have been involved with some of the companies like Ether, Euler, Log9, and we have Ultraviolet over here. Again, tremendous kind of a feedback on them from the investor community. So we are seeing that kind of interest. I think the question is, would real growth capital come in and put in those, $200, $300 million onward kind of checks to really fuel the next level of growth, help these companies build their distribution? Over there, certain question marks are there. I think except for maybe Ola Electric, which is a different kind of an approach, we are yet to see that kind of a big push. And it's all about what's the quality of the products, the distribution, after service on the consumer side for the bike companies, and then how defensible are the long-term moves for some of the battery tech kind of players. But we're seeing very good interest from these kind of investors. And the unfortunate part are most of them are folks like me who do not understand these spaces. So yeah, we are following trends, we are following patterns, trying to identify the right teams. But yeah, it's all, if I just do a pattern recognition, a pattern mapping, this was very similar to how the entire pickup happened on the consumer tech side.
Yeah, so in fact, Flipkart was a breakthrough moment.
Absolutely. So we are seeing a very similar pickup, and with a much wider set of investors who are chasing these spaces. I would say maybe in the next 1 or 2 years, you might find it gradually picking up, but this will gain significant momentum, I would say, by 2025-26.
25-26, and would you think that is partially triggered through IPOs or specific M&As of a certain size, and that could open up the floodgates even more in that time frame? Is that an expectation?
My sense is...
Do you think one seminal event versus a few key exits? How do you look at that?
Sure. Again, if I overlay the entire consumer tech side of it, I mean, IPOs happened only 2.5, 3 years back, while this entire kind of a surge had happened in the 2017 to 2020 time frame. That was all about when we saw businesses that were scaled, that were making an impact at a consumer level if they were consumer focused, or at a business level, right, or B2B businesses. And the scale is key. Are you making that impact at scale is key. And I don't think so people will wait for 3 EV IPOs to happen. That is not what will tip the scale. It's because people also want to come in a little early when the entire opportunity is already baked in and well understood with the markets, then it's perfect pricing from an investor standpoint. So you want to be ahead, like you guys have been much ahead in time. So I would say you're an amazing place to be in. Very difficult for other investors to catch up in this period because, as I mentioned, 3 years hence this should take up in a massive way and pretty much become an industry in itself. Just how SaaS broke out from the broader tech kind of an ecosystem and became an industry in itself from
last 5 years or so.
Absolutely.
Yeah. What is your advice and guidance based on so many transactions you've seen, so many entrepreneurs that you have dealt with in terms of what, again, you mentioned scale is critical. What should entrepreneurs do to take advantage of this upcoming tailwind, right? How can they prepare themselves? What did the consumer guys do well? What did the SaaS guys do? What lessons are there for entrepreneurs to take away today, in your opinion?
I must say the core of all of this is, and that we have seen in most of the new age businesses, because you get so much of interest, so much of excitement on the market. I think what most people, which is founders, boards, investors, miss out is, at the end of the day, it's a business. It has to look like a business. We used to see in SaaS companies, yes, we were talking about ARRs and US go-to-markets. But yes, it has to make money. It has to demonstrate a certain profitability. It has to demonstrate a certain economic value add that you're doing. And it just cannot be top-line traction or just core IPO creating. I think the core of all of this is these businesses have to look like businesses. And
your key metrics for a definition of that, right?
Business is all about making money. It has to deliver ROE. That is it.
Yeah.
Now, yes, you could be in the journey, but it should be visible. I think that's a lesson hard learned by the entire industry. I would say consumer tech was the first to learn that. And the moment they started demonstrating profitability, both the interest from capital providers and opening up of the public markets became so much easier, rather than just believing in a disruption that you've done. We see Series D, Series E businesses that have raised few $100 million, and they still look like projects and not businesses. I think that's a trap, I believe, in any new age tech that one could get into. That it cannot be just a innovation which is someone else's headache to commercialize and make it a viable business. I think that is one. I would say that is what, as a banker in the ecosystem, it scares me, because we've seen that in SaaS where their burn rates are even higher than some of the craziest consumer tech company burn rates.
Yeah, and we were expected to be 80% gross margin businesses in some sense.
Then we should be 40% EBITDA, but they are minus 50, minus 70% EBITDA. So, so I think that's and similarly, right? It cannot be that you raise $100 million and you are at a $20 million ARR and you become a success because there's a phase on the market which was valuing you at 40 times multiple and you became a sort of a unicorn or whatever you want to call it. So I think that's the core part is it should look like a business and it should deliver, it should have the potential to deliver returns which are comparable to these other industries. Because eventually investors coming in from a portfolio perspective, they have to deliver, depending upon the asset class, anywhere between a 15 to 25% IRR. And if a business cannot deliver it, they're not in the business of giving grants, right? They're in the business of putting in money.
Fair enough. I think that's the sort of cautionary note in some sense to say, hey, entrepreneurs have got to focus on converting that into a really viable business, etc. Any key things on the policy side, on the government side, that that you're also seeing global capital sources, respond positively to? Of course, there's stability on the political side, seemingly. So therefore, but policy side, action side, being proactive side, what have you seen that has resonated well on the global audience?
So, in fact, this is a very interesting time in the year. This also dovetails in one of your first few questions is, in the last month or month and a half, we have hosted around 12 or 15 kind of investment boards of some of the larger funds in India, and which means all of them not just at the senior partner level, they're getting their boards to start spending time in person here. For most of them, it was their first trips. I think what they have been most impressed with, so it's more about me asking them what are you most impressed with, is actually the public infrastructure. I think that is something on the tech side. What I mean is on the tech side, be it the entire India stack, be it the entire approach, even small aspects like how do you use your entire UID backbone and your, and create a product like a Digiyatra. I think they've been very impressed by India leapfrogging not just a few generations, but in some places actually going 2 generations ahead of some of the Western counterparts, especially be it payments and financial inclusion. I think it's through the roof. So that is something that they start relating the government to be far more forward-looking, and they're seeing the same kind of initiatives on the manufacturing side. I think exports ideally should get to 25, 26% of the GDP in the next, I would say, 2 odd years. That could be a very, very strong kind of a positive. And I think that is something which global investors are keen upon in tracking. Yes, we also have some of the policy misfires that ends up hitting up some sectors on the negative light, and that creates questions in terms of how they should underwrite the country risk for India. But at the overarching level, it's very bullish on overall policy, and then some of the recent initiatives around manufacturing, offsetting, inviting Make in India with global giants across, be it smartphones, be it on global EV manufacturing, all looking to set up their facilities over here is a very strong positive.
Got it. We also mentioned briefly, right, and we'll try to wrap up quickly. We've kept people away from their tea also, right? But we'll talk about just there is a lot of domestic capital coming in,
yes,
right? What is the source of that, and how can they also take advantage or further ride on the, how can that be a great marriage in terms of domestic capital increase, yes, and foreign capital really being attracted, right? Yes. What is your read and learning there?
I've been very pleasantly surprised with the domestic capital coming into some of these startups. We ourselves, recently raised almost, $150 odd million of capital for a consumer tech player, purely from some of the leading kind of families. So yes, large family offices. So we run a large wealth business.
Yeah.
We see large family offices being very active across alternate assets, be it seed stage funds, VC funds, growth funds, and I'll come on that, as well as direct investing into some of the later stage companies. We ourselves have raised a few funds now. Look at the amount of, so I would say how domestic capital should play is really backing in players such as yours. I think that is something that they have to do in their entire asset allocation. We are seeing at least, 20 to 30 new domestic kind of a GPs that have raised money purely from domestic investors. It's all scaling in a very big way. And the best part about this capital is it stays within the country, right?
Yeah.
It's not taking a flight out, either when the company lists or an M&A happens. And this capital usually comes in with at least a 1.5 times multiplier. So if you return back 100 rupees, these families would add another 50 to it and redeploy back to the market. I think that has been a sort of a flywheel that was missing in the market because all the capital was going out for the returns that were being generated. The market cap of the overall industry is roughly around $500 billion, and the returns which were generated is M&As around 40 to 50 billion, secondaries around 20-25 billion, and the market cap of the listed companies is again, tech listed companies again around 50 billion. So imagine it's a good quantum, but bulk of that went out.
Yeah.
So with domestic, there's a very good spin that's happening, and reasonable education of the market is also happening as they're seeing these innovative models scale up. So we are very bullish till I would say 5 or 7 years back. Almost 95% of the capital in which we used to deal in and bring into companies or clients of ours used to be global. I think that ratio now is around 75 or 80 is global and 20 is now
that's a good ratio.
Money. Yeah.
Lovely. No, last question. 5 years ahead, what are your predictions? What are you most excited about? Where do you think most capital will come from? And maybe what do we also watch out for? Correct? Just peek into the future from your perspective, what you're seeing.
Yeah, I would say I'll go in practically in 2 key areas and 2 extremes. The first one is really roti kapda makan. I think that is here to stay, which means regular B2C e-commerce, D2C brands, you do a good job, the kind of market, the kind of scale of market we have is very different. This is not comparable to some of the other markets that get capped out very soon. So I think one extreme is simple businesses done well, and I think other extreme is this innovation, which is the convergence of deep tech, whether you call it AI-driven hardware, AI-driven IoT, AI-driven. I think these are two extremes where I believe disproportionate capital is to be made from an overall risk-reward, management standpoint. So.
Lovely. Thanks, Karan. I think we're on time, right? Lovely conversation. Thanks for sharing those insights. Headline, I think the domestic capital keep on churning is very exciting for entrepreneurs, funds alike, and foreign capital continues to be excited from a medium to long-term perspective given the stability. We just have to deliver on scale and building real businesses. Really appreciate that, Karan. Thank you so much.